Hello and welcome to MasterChartsTrading.com market recap for the weekend on Friday, March 13, 2015. This week, on March 10th, our trading system generated a sell signal in the S&P 500 and we exited our position in SPY. Also, market breadth seems to be flashing warning signs and is deteriorating further. We will also look at XLF Financials Select Sector SPDR, as it's sort of like a mixed bag, showing some conflicting signals. TLT, the Treasury bond fund, sprung what appears to be a bear trap, and I'll explain what I mean by that. Gold and gold miners at a critical juncture, and they could easily retest the recent November lows. And finally, oil broke down conclusively this week and probably is headed lower. Okay, important disclaimer, all information in this video and on MasterChartsTrading.com is for educational and entertainment purposes only and shouldn't be construed as a recommendation to buy, sell, or sell short said securities. Alright, let's look at stocks. So the S&P 500, this information, by the way, is available on our public charts page, and at the end of the video I'll show you how to find that information. So this is a chart of the S&P 500. First of all, this is a bullish chart, long-term bullish chart. So in a bullish chart pattern, I prefer to personally go long versus shorten the market. It's definitely possible to short a strong bullish market, but it is tricky because you have to find the top, and it's difficult to find the top because they just keep coming up more and more tops. So as far as the latest iteration of the long trade, our latest entry was on February 3rd, and we entered the market here, and then we took profits, I believe right here in the 24th and 20th and the 2nd of March. And then finally we closed our position just on the 10th of March, just this week. Right now I'm basically waiting for a re-entry opportunity, but since we are sort of in a corrective mode, I don't exactly know where that opportunity might present itself. You know, right here in the $2,000 point area, definitely a good support area. So if we don't hold here and rebound, we may drop lower and you know, to the first support in this area here. At this point in time, I don't really know when the correction will end. All right, let's move on to market breadth for the S&P 500. So candlestick chart for S&P 500 market breadth. So this is once again, you know, bullish chart, higher highs, higher lows. The advanced decline line is confirming the uptrend. In other words, the higher highs are confirmed by the higher highs in the advanced decline line. Now, as far as momentum of the breadth, in other words, you know, are we moving, are majority of the stocks moving up or majority of the stocks not moving up? It definitely has rolled over and has not yet rolled back up. So in fact we have entered the negative territory, like for example right here, when we entered negative territory, the correction extended for quite some time into October low, but then we had a breadth thrust and market breadth rolled back up, and then we had a nice advance. So has not happened yet. We're still dropping as far as the momentum of the breadth is concerned. As far as new highs, new lows indicator, you know, we're still in the positive territory. We had a little bit dip in negative territory, but it looks like we recovered. You know, this will basically depend, you know, if the breadth rolls back up, then we will stay in the positive territory. If it continues lower, we may actually end up in a negative, like here and here. Regular momentum oscillator, MACD, still is in negative territory and has not crossed back up above its signal line. So what I'm seeing right now is this correction that started in end of February is still extending and may not yet run its course. And the next chart, you can see New York Stock Exchange Composite Index. And I've actually highlighted this chart in the past due to the fact that we had a bullish divergence between the advanced decline line and the actual price of the security. You can see that it was making a higher high. The advanced decline line was making higher highs, while New York Stock Exchange Composite was flat to making lower highs, in fact. And then finally, right here, we had a confirmation of breakout. We had a higher high in advanced decline lines and also a high in the stock security itself. You can see 11,142, and here it was 11,105. So it did make a high. So this was a bullish divergence, and it did resolve in the bullish manner. Now, currently, we can see that the new highs, new lows indicator dropped into negative territory. Now, this may be to the fact that oil-related issues are again starting to make new lows. So this once again may be related to oil stocks. So how much will it weigh on the actual indices? It's difficult to say, but you can see that in the past, when New York Stock Exchange new highs, new lows indicator rolled back down, we did have corrections here also, and here also we had corrections. So this it just became negative this week. So we may still have some correction to run its course. And the same goes here for Bread's momentum. You can see it's still falling, and it's actually negative territory for the volume momentum as well. Okay, next chart is of XLF financials. So this is kind of like a mixed bag, and one of the weaker sectors from the large cap perspective. You can see here in late December, XLF made a high, but then since then it kind of just went sideways, down to sideways, and in fact it made the lower high right here in just in March. So this is a lower high pattern, and with the market sort of wanting to go lower, we may roll lower in the financial sector as well, and again retest the 200-day exponential moving average here, and this lows from January. However, on Thursday we had a nice big surge right here of 2+%, and our trading system, I'll show in the next chart, did in fact generate a buy signal, but it looks like XLF is already getting cold feet. Like this candlestick from today, first of all, it's an inside day. In other words, this entire candlestick from today is within the range of the yesterday's candlestick. So this is kind of like an important consolidation. If it breaks to the upside, then the move to the upside will be pretty strong. Conversely, if it breaks to the downside, I'm almost certain it will break this low, this lows right here, and move to the 200-day exponential moving average. As far as regular oscillators, it's still in the positive territory, but below its moving average, so it's not terribly bullish either. And to top everything off is the advanced decline line. Looks like it made a higher high, so versus a lower high. So this is a bullish divergence. So it's a very kind of mixed bag. Even though breadth seems to be pointing upwards, the price itself is sort of moving downwards, which is a bullish divergence. I'm guessing that this is due to the fact, that smaller cap stocks are doing better than the large cap stocks. Okay, so as far as breadth momentum, same thing. We are in a positive territory, but below the 10-day exponential moving average. So very mixed bag. And the next chart, XLF, same thing. The buy signal, buy signal was indeed generated just on March 12th on our bio trading system. Okay, next, bonds. And bonds have been very strong for the past year, and this, let me just do this. This SCTR, stock charts technical rank, ranks all stocks and all ETFs, the non-leveraged ETFs within the universe of the ETFs, according to relative strengths, to each other. And you can see that TLT, even though it kind of dropped, in the 50% area, rebounded. In fact, it's still next to the 90. So it's still pretty strong. And see this, looks like there was a support break last week, and TLT moved lower, but then this week it just immediately popped right back up. And our system did generate a buy signal on it, and we have an open position right now in TLT. You can see that a regular momentum oscillator, the MACD, also crossed over to the upside while in negative territory. So this is a kind of like a good place to be buying for my taste, and we did open a position here. So next chart shows the actual buy signal in TLT on the 11th of March. This is a CCI, Commodity Channel Index, and it crossed above 50% here, and we did enter the market here. Previous iteration, you can see that it was as far back as 19th of September of last year, same thing, and since then there was at least 14% gain, and if you took profits earlier at the top here, you could have had about 20% gain as well. All right, next, moving on to gold. So gold this week lost only about 1%, but first of all, gold, this is a gold chart, it's in a long-term downtrend. So how do I know it's in a long-term downtrend? So this is this green line right here, 200-day exponential moving average. The price is below the 200-day exponential moving average, and also this red line, which is a 50-day exponential moving average, is below the 200-day exponential moving average. So that's a very easy way to test, whether or not security is bullish or bearish. If a 50-day EMA is below 200-day EMA, chances are it's bearish. So we're going to err on the side of the bears right here, and when the price overextended itself to the upside, it presented itself for a nice shorting opportunity. And on the next chart, I'll show GLD, GLD SPDR Gold Trust, which pretty much mimics the price of gold. You can see that this was a very nice shorting opportunity. So the price, moved above the averages here, and then we had our trigger signal right there on the 27th of January. So as far back as 27th of January, there was a trigger signal for a short signal. and this position could be up 10% by now or so. Position still would have been open, yeah, at this point. So you can see that gold is getting very close to the November lows, and you know, I last week after this huge drop, I thought it was going to do like this number, kind of like move up a little bit and then break down, but it didn't even happen. It just continued lower, and um, it kind of like not looking back. So it looks like it's getting ready to test this area here. You can see that the momentum oscillator is already kind of overextended to the downside. So I am expecting a rebound here, and once it rebounds, most likely place it will go is to about $1,200 because there's just tons of resistance here in this area. And if it rebounds here, I will be looking for a re-entry opportunity on the short side again, because it's still a bearish security. All right, gold miners, pretty much similar picture as the price of gold itself. Just refresh this image. 1 second. Refresh the chart. So similar picture. Let me just show you the trigger first. Short signal. Gold miners are more volatile, and there were more signals to it. So the initial signal was as far back as 28th of January, and then the follow-up signal was on the March 3rd as well. And then let's go back to this chart, and I'll show. So this candlestick right here, this last price action from Friday, this may be like a hammer candlestick, and you can see long tails sticking out from the bottom. So this indicates that buyers came in and kind of pushed the price back up. It's difficult to say whether or not, you know, this is indeed, you know, the bottom. You know, you could argue that this is a triple bottom, but you can also argue that this is just a prelude and will continue lower. Generally speaking, I would, you know, err on the side of bears right now, because once again, 200-day moving average, exponential moving average, is above the 50-day exponential moving average, and the price is below 200-day moving average. So this is quite bearish still. As far as market breadth of gold miners, it is confirming the move in price of the actual security. You can see the advanced decline percent, advanced decline volume percent is trending lower. Bullish percent index is also moving lower, and new lows are still negative. All right. Okay, and then finally, oil. This week we saw a breakdown in oil, kind of like a conclusive breakdown on Thursday. Possibly you can argue that it was even on Wednesday, but you know, this is not looking good. So a similar picture, you can see that this is a 200-day exponential moving average, you know, is above the 50-day exponential average. So this is a bearish security, and in a bearish security, it would make sense to short the rallies. There was a very small rally here. We tested, you know, resistance 3 times here in the $20 area and failed. In the next chart, I'll show you the actual signal that was generated for USO, United States Oil Fund, by our trading system. And once again, the short signal was as far back as February 10th. We were able to enter the market a little late, I believe on the 23rd, 24th of February, but nevertheless we have an open position in SCO, inverse of oil fund. Okay, that's it for this week. Let me show you how to find us on the internet. So if you go to MasterChartsTrading.com, you can see that we have a blog there, and you can read all of these entries there. We have a video section where I'll post this video as well. Okay, and we also have the public chart link here. Most of the charts that you see in this presentation are located in this link here on the public charts page right here. If you click it, you will see most of the charts that I talk about in this video. Please sign up for our mailing list. We're getting really close to starting some sort of a trading alert service for our customers, and if you sign up now, you will get a better deal. If you have a Twitter account, Facebook, YouTube, or StockTwist, please follow us there as well, as we post information there as well. All right, that's it for this week's recap. Thank you very much, and have another great trading week.